Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets, where we'll be having the live analysis session. Right, before we start today's webinar, do take note that this is marketing communication and does not contain and should not be construed as containing investment advice and an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's coming up on the economic calendar for this week. Right, so take note, there's quite a few things going on, but I just want to bring your attention towards the CPI data that's going to be released in Switzerland and in the EU, and also it's jobs week in the US, with ADP employment report out on Wednesday, 8th of January, and the BLS employment report out on Friday, 10th of January, where we'll get a look at the non-farm payrolls and the unemployment rate. Sandwiched in between, we also have the minutes of the FOMC meeting that took place in December of 2024, right? The final FOMC meeting of that year. Right, so here's the calendar for this week. Right, as I mentioned, there's quite a few other things going on as well. Right, for example, later today we have the final services and composite PMI reading out of the US. That's at 2:45 p.m. GMT time. Tomorrow, of course, we have Swiss inflation data out at 7:30 a.m. GMT, followed by flash CPI data for the Euro area. That's out at 10 a.m. GMT time. We also have ISM services PMI report and Joel's job openings for the US at 3 p.m. And then on Wednesday, we have inflation data out of Australia, followed by the ADP employment report, and then after which we have the FOMC meeting minutes that will be released at 7 p.m. GMT time. And then on Thursday, we have retail sales out of Australia and CPI and PPI data out of China. And finally, on Friday, 10th of January at 1:30 p.m. GMT time, the highly anticipated non-farm payrolls will be released alongside with the unemployment rate, right? This will be released by the Bureau of Labor Statistics, right? As you can see here, quite an eventful week lined up for us in 2025 already. All right, okay. Taking a closer look at Swiss inflation, right? We can see on a monthly basis, prices have dropped for 3 consecutive months in Switzerland, and December's forecast points to a 4th consecutive month of lower prices. So clearly we can see deflation setting in Switzerland, and that has caused the annualized rate to fall down to as low as 0.6% in October and edging a little bit higher to 0.7% in November. Right, with monthly prices expected to decline for the 4th consecutive month, we can definitely expect headlines CPI or the annual rate of CPI to remain under 1%, right? This paves the way for the Swiss National Bank to continue cutting rates in 2025, right? The Swiss National Bank has already made 3 aggressive rate cuts in 2024, and this theme is likely to continue as we kick off 2025. So we can expect the Swiss franc to remain under pretty strong selling pressures as we begin the new trading year. Right, then looking at inflation in the Euro area, on the left I have the chart for the core CPI, and on the right is annual headline CPI. Right, core CPI has remained unchanged at 2.7% since September, and December's forecast points to an unchanged reading. Right, for headline CPI has accelerated over the last 2 months, and now December's forecast is pointing to a 3rd consecutive month of higher prices. Now, this is largely expected because this is due to the base effects that were caused by last year's sharp declines in energy prices, which are now no longer factored into annual rates. So we've already seen the euro come under intense overhead pressures since the end of September, and we're likely to see this currency remain under pressure as we begin 2025 as well. Right, and finally looking at US employment data, right, we have the ADP employment report out on Wednesday at 1:15 p.m. GMT time, where we expected to see job growth of 131,000 for the month of December. November saw much slower gain in jobs growth, with 146,000 workers being added to payrolls. This was the lowest amount in 3 months. and it was also slightly below the forecast of 150,000. Not only was it below the forecast of 150,000, it also came in under the 12-month average of 155,000. And we can see December's forecast as well is expected to show a slower month of job growth, right? This would mark the second consecutive month of slower job growth, with 131 workers expected to be added to payrolls. So we can see the rate of job growth perhaps starting to slow down once again in the US, something similar to what we saw in April to August, right? This is something perhaps to keep a closer eye out for. Now, sandwich in between, right, in between the ADP employment report and BLS employment report, we have the minutes from the FOMC meeting that took place in December that will be out as well. Remember, this meeting that took place in December, right, was the led to a third consecutive rate cut by the Federal Reserve. However, this was interpreted as a very hawkish cut by the Fed, because of course they had made 3 consecutive rate cuts, but what was important was the summary of economic projections, and which showed the dot plot indicating now policymakers see just 2 rate cuts in 2025 totaling 50 basis points, which is significantly lower than the full percentage point of reduction that were projected in the previous quarter. So what we are seeing now is we are probably expecting maybe 4 rate cuts totaling 100 basis points in September, but now in December, right, the SEP projections now indicate just 2 rate cuts of 50 basis points in total. So we can see a significantly slower rate of reductions in the federal funds rate in 2025, which has led which has come to the conclusion that the December cut was indeed a hawkish cut, right? So take note, despite making 3 consecutive rate cuts in 2024, the dollar has actually strengthened due to macroeconomic indicators such as inflation, CPI, and PPI, as well as jobs growth rebounding in the fourth quarter of 2024, right? We saw headline CPI and core CPI and PPI all accelerating in the last quarter of 2024, accompanied with a strong rebound in job growth as reported by the ADP and BLS employment reports, right? So despite the Fed making 3 consecutive rate cuts in the final quarter of 2024, demand for the dollar has picked up significantly, with the dollar index rising above 109 as well. All right, and finally, on Friday at 1:30 p.m. GMT time, the Bureau of Labor Statistics will release its non-farm payrolls report and the unemployment rate. Now, the chart on the left shows the unemployment rate coming in at 4.2% in November, and December's forecast points to an unchanged reading as well. Now, non-farm payrolls over the last few months has been pretty patchy, right? You can see August just saw maybe about, if I'm not mistaken, about 70,000 jobs being added, while September saw a huge increase of nearly about 260,000, I think, and October saw a very soft gain of 38,000. I believe it was 36,000, and then November saw a pretty strong rise of 225,000 as well. Right, so you can see a job growth as reported by non-farm payrolls has been pretty patchy over the last 4 months, and December's forecast points to a reading of 154,000. This reading of 154,000 sits just slightly below the 12-month average of, I think, 159,000, right? So you can see a job growth in the US as reported by non-farm payrolls has been pretty patchy, and if we do see ADP employment report slow down more than anticipated, while the unemployment rate perhaps edges higher, unexpectedly edges higher, and we also see a non-farm payrolls miss, we could see the dollar come under significant pressures, right? So take note, right? We may see this recent strength in the dollar probably wane a little bit on Friday should we see a weaker than expected jobs report. All right. Now with that, let's move on over to the charts and trading view and begin the analysis on the dollar index. Right, hi Ajay, good to see you as well. Right, and of course, we'll begin the analysis with the dollar index, cover a few of the major currency pairs, touch on the commodities, the indices, and Bitcoin and Ethereum as well. And of course, should you have any other requests, do drop them in the chat box early so we have time to go through the analysis together. And of course, do remember to smash the like button as well. Okay. So let's start with the dollar index. Right, we can see here Since the end of September, the dollar index has had stabilized at around 100.45 to stage a very strong rebound, rising as high as 109.53 last Thursday, 2nd of January. Right, bounce, this rebound from trough to peak was as high as nearly 9.4%, a huge rebound in the dollar index, right? Over this period, we saw, despite the Fed making 3 consecutive rate cuts over this period, we actually saw, as I mentioned earlier, headline and core CPI and PPI accelerate in the US. We also saw a rebound in stronger jobs growth as reported by the ADP and non-farm payrolls over this period, all of which combined with stronger GDP output and a robust PMI activity, right? We saw demand for the dollar return in a huge way, and we've seen the dollar index surge past 109 last week. Now, after making this high last Thursday, right, it pulled back on Friday, and as we kicked off the brand new trading week, the dollar index is sliding lower as we speak. Now, we could see it fall towards its pivot at 107.49, right? This pivot level is identified as a pullback support, right? This level previously functioned as a swing high resistance on 25th of November, and once the bullish breakout took place on 18th of December, this level can now potentially function as a pullback support, which has been identified as the pivot at 107.49. Now, this pullback level is also accompanied by Fibonacci retracement at 23.6%. Right, this retracement level was found starting from this swing low on 27th of September, going up to the high on the 2nd of Jan. Looking slightly below, right, the 38.2% Fibonacci retracement also accompanies what I see is an overlap support here at 105.44. Right, we can see the dollar index running into a little bit of resistance here on 6th of November. After that, we can see it finding support not once but twice at around 105.65. Right, this creates a pretty decent overlap level that we can identify as the first support, and is also accompanied by Fibonacci retracement at 38.2%. Right, so for the dollar index, right, take note, we've got composite PMI data out later today, and we also have ISM services PMI due for release on tomorrow, on Tuesday. And if both of these point to much stronger PMI activity, we could see demand for the dollar return. Right, so with that said, right, should we see the dollar index continue to slide lower, where I think it could stabilize is at this pivot level at 107.49, which has been identified as a pullback support. So we're looking for potential bullish bounce for the dollar index should it reach this pivot level, and of course if it's accompanied by stronger PMI activity in the US in the first half of the week, right, we are likely to see demand for the dollar remain elevated and keep dollar index pushing higher as well. Right, we can also see that the dollar index continues to trade above the green Ichimoku cloud, which highlights the ongoing bullish momentum. Right, with that, then let's move on over to the euro. Right, as we've got CPI data out of the euro area today, later on tomorrow, Tuesday. Right, so if the dollar index has increased sharply since the end of September, we can of course very well expect the euro to head in the opposite direction, which is what has clearly played out. From this peak to trough, right, we can see the euro has shed more than 8.8%. This is a huge drop over the euro, dropping as low as 1.0224 last Thursday, 2nd of Jan. Right, since then the euro has stabilized last Friday and is continuing to retrace higher today as well, Monday, 6th of January. Right, so the first support for the euro is where the swing low took place last Thursday and Friday, right, and that's at 1.0255. And where I see resistance is at this overlap level at 1.0458. Right, we can also see that this currency pair continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. Right, so the pivot level at 1.0458 has been identified as an overlap resistance. Right, we can see resistance here very clearly from 20th of December till the 31st of December, and we can see support as well beginning from 26th of November till the 13th of December. Right, so this creates a nice overlap level which we can identify as the pivot, and that's an overlap resistance which is accompanied by not one but two Fibonacci retracements. We have a retracement at 23.6% and a retracement at 61.8%. So how do we find these retracement levels? Right, the 23.6% retracement was found starting from this swing high on 25th of September, ending with the swing low here on 2nd of Jan. So that's how we got the 23.6% Fibonacci retracement, and the 61% retracement was found starting from this swing high on 6th of December and ending at the swing low here on the 2nd of Jan. Right, so we have a Fibonacci confluence at around the pivot level here. Higher up, beyond the pivot, I see another overlap resistance at 1.0613, and we can see the euro making a nice swing low bounce off this level in mid-April, after which this level then proceeded to function as resistance on 19th of November and then again on 6th of December. So this creates another overlap level that we can identify as the first resistance, and that's at 1.0613, and this is also accompanied by Fibonacci retracement at 38.2% over here. Right, so we're expecting the euro to retrace a little bit higher, right, and where it could stall and run into resistance is at the pivot level at 1.0458. Right, now let's take a look at dollar franc, right, as we've also got Swiss inflation data coming out later tomorrow, or coming out tomorrow, right. So just like the dollar index, right, after hitting a high on Thursday, it has pulled back now for 2 consecutive days, and it's a similar play that we are seeing for the dollar franc, right? The dollar franc is experiencing the similar pullback as well. Now, the pivot level at 90.39 has been identified as a pullback support. Previously, this level functioned as a nice swing high resistance on 2nd of July, right? And after the bullish breakout took place on 31st of December, this level can now potentially function as a nice pullback support level, which is also accompanied by Fibonacci retracement at 23.6%. Now, this retracement level was found starting from this swing low from 6th of December, going up to the high on the 2nd of Jan. We can see that the 23.6% projection aligns very well with the pullback support, which is the pivot, and a little bit below, the first support is a nice overlap level at 89.17, which is accompanied by Fibonacci retracement at 50%. Right, we can see dollar franc running the resistance here on 14th of November, and after that proceeding to function as support on 13th of December till the 23rd. Of course, we can see here dollar franc breaking above this level here on 22nd of November, but generally we can see that this is still a pretty decent overlap level, which we can identify as a first support at 89.17. That's also accompanied by Fibonacci retracement at 50%. Right, and in terms of resistance, right, there's a nice swing high resistance that was formed on 23rd of May, right, with dollar franc hitting as high as 91.60 before reversing to drop lower. And this is how the first resistance has been identified. And this swing high resistance is also accompanied by a Fibonacci projection at 78.6%. Now, this projection level was found starting from here, 0.1, beginning from this low swing low here on 6th of September, going up to 0.2 on 22nd of November, and ending at this swing low here at 0.36 of December. So that's how we found the 78.6% Fibonacci projection, which sits pretty close to the swing high resistance that was formed on 27th of May, which has been identified as the first resistance. So we're looking for a potential bullish bounce for the dollar franc, right? Similar to the for the dollar index, right? And especially if inflation continues to deflate on a monthly basis in Switzerland, we can definitely expect the franc to come under significant pressures, and that would cause dollar franc to resume its uptrend and continue to climb higher, right? And of course, we see this currency pair continuing to trade above the green Ichimoku cloud, which again highlights the ongoing bullish momentum. All right, so we've covered the dollar index, the euro, Swiss franc. We can move on over to the commodities, right? And of course, if you have any other requests, please do drop them in the chat box, right? And I'll be more than happy to go through the analysis with you. All right, moving over to commodities, let's start with gold. Right, since 15th of November, right, we can actually see gold prices have just traded sideways. Right, if you look at it within this box, it has ranged between $2,560 on the lower end, right, approximately around $2,560 per ounce on the lower end, and running to resistance at around $2,715 per ounce on the upper end here. So you can see here, after what was a very strong bullish run throughout 2024, we saw gold prices pull back sharply in early November, and then since mid-November it has just sort of traded sideways within this sideways channel here. right? So the pivot at $2,554 is identified as a swing low support, right? This is a nice swing low support that had taken place here on 15th of November, and it's also accompanied by Fibonacci retracement at 50%, right? This retracement level was found starting from this swing low here, or starting from this low here on 3rd of May, going up to the intraday all-time high that was formed on 31st of October, and we can see the 50% retracement sitting just below the swing low support on 15th of November, which has been identified as a pivot. So looking slightly below, $2,469 per ounce is an overlap support, right? It's an overlap support here. We can see gold running into resistance, making the first swing high resistance here on 17th of July, the second swing high resistance on 2nd of August, running into resistance once more on 14th of August, and after which it proceeded to bounce off this level a couple of times. And this creates a very nice overlap level at $2,469, which we can identify as the first support, and is also accompanied by Fibonacci retracement at 61.8%. Right, and in terms of resistance, right, we can see very clearly spot gold running into resistance not once but twice at $2,715, and this creates a multi-swing high resistance that we have identified as the first resistance. So with gold pulling back on last Friday and today, this precious metal could continue to slide lower, and where it could stabilize would be around this zone that's identified by the pivot here, right? See a strong support zone. I see a strong support zone at around $2,560 per ounce. So very likely we could see gold prices stabilize around this level and reverse to bounce higher. All right, then let's move on over to crude oil. Right, XTI USD is the instrument that tracks WTI crude oil futures, and we can see that since the second week of December, crude prices have rebounded very strongly. Right, this rebound from trough to peak saw crude prices jump nearly 11.2%, right, as it smashed above $74 per barrel. When did that happen? Last Friday, right? Last Friday, 3rd of January, it managed to climb above the $74 mark. But today we are seeing crude prices pull back slightly. Now, this pullback could stabilize at the pivot. The pivot level is at $72.73. This is actually an overlap support level that's accompanied by Fibonacci retracement at 23.6%. This level here is very significant because we can see a swing low taking place here, a swing low taking place here on 5th of June, the second swing low taking place on 5th of August, and the third swing low taking place on 22nd of August. After that, this level proceeded to function as resistance, right? A swing high resistance being formed on 24th of September, functioning as support once more on 9th of October, and then running into resistance again 24th of October, and then again on 7th of November. So very clearly, this is a very significant overlap level that we can identify as the pivot at $72.73. It's an overlap support that's accompanied by Fibonacci retracement at 23.6%. So we're looking for a potential bullish bounce for XTI USD should we see crude prices drop towards $72.73. Now, in terms of beyond the pivot level, the next major support for crude oil looks to be around $69.60. We see a nice swing low being formed here just before Christmas, right? And this is how the first support has been identified, and is also accompanied by Fibonacci retracement at 61.8%. And of course, higher up, right, I see a little swing high resistance being formed here on 11th of October, and that's at $75.96 per barrel here. So once again, to wrap up XTI USD, this is the instrument that tracks WTI crude oil futures, right? We could see crude prices stabilize around the pivot and reverse to bounce higher to resume the uptrend. And then should that bullish reversal materialize, we can then target the first resistance at $75.96 as a potential take profit target for this commodity. Right, then let's move on over to the indices. Right, let's start with the DAX. Okay, let's start with US 30, then DAX and US 500, and then we'll move on over to Bitcoin and Ethereum. Right, so looking at US 30, US30 is the instrument that tracks the Dow Jones Industrial Futures. And after making this intraday high on, I believe, let's see what's the date here, where is the highest point? On 4th of December. Is it 4th of December? 3.25. Yep, it is 4th of December was when the intraday all-time high for the Dow was formed. Right, we can see that the Dow pulled back very sharply. I think this was like almost 11 consecutive down days for the Dow Jones, right, where we can see it losing as much as 6.9% over this period, a huge drop for the Dow. And since then, it has stabilized at around 42,300. It made an attempt to retrace higher after Christmas, but it stalled around 43,200 and reversed the drop lower once more. Now, as the new year kicked off, we can see the Dow Jones stabilizing and it's making a second attempt towards 43,300, right? So the pivot level at 43,347 has been identified as an overlap resistance. Right, there's a nice swing high resistance that was formed here on 21st of October, after which we see a nice swing low being formed on the 19th of November, and we see another swing high being formed here right after Christmas. So this creates a very nice overlap level, which we can identify as the pivot, right? The pivot is an overlap resistance. That's also accompanied by a Fibonacci retracement at 38.2%. This retracement level was found starting from the intraday all-time high on 4th of December, going down to the low of 20th of December, right? We can see the 38.2% retracement aligned pretty close to the pivot, and also we see the 78.6% Fibonacci retracement aligned close to the first resistance. The first resistance at 44,327 is actually a pullback resistance, right? We see a nice swing high resistance being formed here on 11th of November, and we see a bullish breakout take place at the end of November, and then a bearish break take place on 11th of December, right? So this then creates a pretty decent pullback resistance level for the Dow at 44,327, which has been identified as the first resistance. So for the Dow, right, we are looking for it to retrace higher towards the pivot level here, and this is where it could potentially stall once more and consolidate and reverse the drop lower and consolidate between the first support and the pivot, right? You can see here since 19th of December, the Dow has pretty much just moved sideways and looks to be constrained between the pivot and the first support as of now, and perhaps for the next few days as well. All right, then let's move on over to DE40. Right, DE40 is the instrument that tracks the DAX futures, and after stabilizing at around 19,800, the DAX looks to be climbing a little bit higher. Once again, just like the Dow, that after making its intraday all-time high on Friday the 13th, this index dropped as low as 19,620 on Friday 20th of December, but since then it has stabilized at around 18,860. Right, this drop for the DAX was pretty large as well, right? From peak to trough, it dropped nearly 4.4%, right, in a matter of 5 to 6 trading days. Right, so for the DAX, right, it looks to have bounced off the pivot, right? The pivot at 19,681 is actually a nice overlap support, right? We see a nice swing high resistance taking place here on 18th of October. Then we see this nice bounce taking place on 20th of December, creating a nice overlap support level that's also accompanied by not one, but two Fibonacci retracements. Right, the overlap support, right, this overlap support is accompanied by a 50% and 23.6% Fibonacci retracement. The 33.6% retracement level was found starting from this swing low here on 5th of August, going up to the intraday all-time high on 13th December, and the 50% retracement was found by starting from this swing low on 19th of November, and once again ending at the intraday all-time high. So we have a Fibonacci confluence comprising of the 23.6% and 50% retracement levels here. Right, and of course, in terms of resistance, that's at 20,427. It's a swing high resistance close to the intraday all-time high. And in terms of support beyond the pivot, that lies at 18,971. That's another nice overlap level. Right, we can see resistance, a nice swing high resistance being formed here on 30th of August. Resistance once more on 20th of September. Then a nice swing low bounce materializing on 7th of October, and like a double bottom here on 12th of November and then the 21st of November. So very clearly, this is a very significant overlap level that at 18,971, which we have identified as the first support. Right, so the DAX looks to have stabilized above the pivot and could continue to climb higher over the next couple of days as well, right? So similar to the Dow as well, it looks to be climbing higher, and the Dow could stall at around its pivot level here, which is an overlap resistance at 43,347. And for the DAX, it could potentially rise up all the way up towards close to its intraday all-time high. Now, moving over to US 500, right? This is the instrument that tracks the S&P 500 futures, and we see this index climbing higher today as well, right after stabilizing at around 5,869 on the first trading day of 2025. Right, the US 500 stabilized around this level and looks to be retracing higher. Right, is rising up towards the pivot. The pivot has been identified as a swing high resistance close to the intraday all-time high that was formed on 6th of December. Right, yep, 6th of December is the intraday all-time high for US 500. And not only is this a swing high resistance close to the intraday all-time high, it is also accompanied by a Fibonacci projection at 100%. This projection level was found starting from here, 0.1, 20th of December, going up to 0.2, 26th of December, and ending at 0.3, which is on 2nd of Jan. So we can see the 100% projection aligning pretty close to the swing high resistance, which has been identified as the pivot. Right, so this retracement to the upside for US 500 could stall at around the pivot here. Take note of that. And beyond this pivot, the next resistance barrier for US 500 is identified at 6,287. This is a level that's identified by a Fibonacci extension at 161%. Right, take note, there's no other level that we can reference, right, with US 500 making its intraday all-time high on 6th of December. Right, there's no other swing high resistance, overlap, or pullback resistance that we can identify. So in such a scenario, we have to rely on Fibonacci tools such as Fibonacci projections and extensions to help us identify potential resistance barriers. So in this case, we've used an extension starting from here, 6th of December, going down to this low on 20th of December, and we have used the extension at 161% to help us identify the first resistance. Right, first support very clearly at 5,867 is an overlap support, right? We can see resistance here being formed on 18th of October, right around 18th of October, swing low support being formed on 19th of November, and a double bottom here being formed on 20th of December, and then again on 2nd and 3rd Jan. This overlap support is also accompanied by a Fibonacci retracement at 23.6%. This 23.6% retracement was found starting from this swing low on 5th of August, going up to the intraday all-time high on 6th of December. Right, so these are the key levels here for the US 500 on the daily time frame. Then let's move on over to Bitcoin. Looking at Bitcoin, it had stabilized at around 91,870 right at the end of December, and it staged a very nice rebound over the weekend, climbing towards the $100,000 mark. Now, first support is very clear. That's at 91,869. This is a nice overlap level, right? This is a nice overlap level where Bitcoin has previously run into resistance in mid-November, and after that you can see since 26th of November it has bounced off this level several times, indicating a very strong support level at 91,869. I see Bitcoin rising up towards the pivot at 102,116. This is a pullback resistance level that's accompanied by Fibonacci retracement at 61.8%. Right, previously this level functioned as resistance from 5th of December till 14th of December. So for nearly 1 week, this level functioned as resistance before the bullish breakout took place, and then a strong reversal materialized. Then this level here can now potentially function as a pullback resistance, which is where I think Bitcoin could potentially stall as it rises up, as it continues to climb higher over the next few days. right? This pullback resistance level is also accompanied by Fibonacci retracement at 61.8%. And of course, the first resistance for Bitcoin is close to the intraday all-time high, where there's a nice swing high resistance that was formed on 17th of December. First resistance is at $106,444, pretty close to where the intraday all-time high was formed. Right, all-time high for Bitcoin was formed on Tuesday, 17th of December, and that's at $108,391. Now let's switch on over to Ethereum. And similarly to Bitcoin as well, Ethereum has stabilized at after Christmas and at the end of December as well, and stage a very nice rebound, and it could potentially rise up towards its pivot that's also identified as a pullback resistance at $3,846 per ounce. Here we can see this well, this retracement now looks to be fizzling out already here at around 3,661, but perhaps with Bitcoin still looking pretty strong, maybe Bitcoin is going to just pull up the wider crypto market and keep Ethereum elevated as well. And then we could likely to see really run into some serious resistance at around $3,846, which is a pullback resistance that's accompanied by Fibonacci retracement at 78.6%. This retracement was found starting from here, this swing high on 16th of December, going down to the swing low here on the 20th of December. First resistance is very clear. It's a multi-swing high resistance. First swing high resistance formed on 6th of December, and the second one being formed on 16th of December, right? That's at $4,094. In terms of support, we see Ethereum stabilizing at around $3,250 since 22nd of December. So that's how the first support has been identified, and it's also accompanied by Fibonacci retracement at 38.2%. We found this retracement starting from here, this swing low on 5th of August, going up to the high on 16th of December. Right, so these are the key levels here for Ethereum as well. Right, hi Ajay, any requests? Right, is there any other instruments that you would like to see? Is this? Uh-oh. Hang on, let me just check something what's going on here. All right, okay. So it looks like there's no further requests. All right, that's the matter. Before we continue, right, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the session with a few more analysis. Right. Really appreciate it if you guys can give your feedback with regards to today's webinar, and at the same time do remember to smash the like button on YouTube as well. Right, okay, so we've covered most of the commodities, the indices, crypto as well. Let's maybe touch on the Aussie, right, since we've got Aussie inflation data as well. Right, welcome Ajay, right, most welcome. Right, so we can see, right, this currency pair has been in this prolonged downtrend, of course, since the end of September, reversing sharply from 69.37 to dropping as low as 61.60 last Thursday. Right, this move here from peak to trough was as large as 11.2%, a huge move down for the Aussie, right? And we can also see it continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. And at the same time, we can also see this currency pair continuing to trade within this bearish channel, right? We see a very strong bearish channel that's been in place with Aussie running the resistance at the upper trend line a couple of times and finding support at the lower trend line several times as well. Now, The Aussie has stabilized at around 61 cents, 61.82 cents, and looks to be retracing higher. And where I see the next major resistance is at the pivot level at 63.01. This is a nice pullback resistance level. Previously, this level functioned as a nice multi-swing low support, right, bouncing on this level several times throughout October before staging a very strong rebound. But once the bearish breakout took place on 18th of December, this level can now potentially function as a pullback resistance. So that's how the pivot level has been identified. Right, so the pivot level is a pullback resistance level, right? And also the intersection of the upward trend line of the bearish channel also highlights or indicates a potential resistance zone here, a strong significant resistance zone. Higher up, right, there's another pullback resistance at 63.98, right? We see a nice swing low being formed here in mid-April, right? Strong swing low support here. And then once this level got taken out cleanly on in mid-December, this level can now likely function as a pullback resistance that's identified as the first resistance. Right, then let's take a look at dollar. Okay, let's see if there's any Fibonacci retracements that we can use. Perhaps let's just try it out. I don't think there was any when I did the analysis earlier, but let's try it again. Starting from this swing high, 30th of September, going down to this swing low here on 2nd of Jan, right? I don't think there's anything we can use, right? You can see 23% sitting at around 63.50, 38% sitting around 64.50, 64.60, right? That's fine, right? Don't force the Fibonacci retracement onto the analysis if it doesn't align well or close enough to the predefined resistances or supports that we had identified earlier. All right, then let's move on over to dollar yen. All right, I'm going to close the poll as well. Truly appreciate it for those who have voted. Thank you so much. All right, then taking a look at dollar yen. Right, dollar yen, after breaking out of a previous swing high resistance, right, this was a swing high resistance that was formed on 15th of November at around 156.25. The dollar yen then bounced off this level a couple of times at the end of December and looks to have stabilized above this overlap support. This level at 156.25 is a nice overlap support that has been identified as the pivot, and dollar yen looks to be bouncing off this level and making an attempt to rise towards its first resistance. First resistance at 161.65 is a swing high resistance that was formed here in on 8th of July, right? Or roughly between or in the first half of July. And this swing high resistance is also accompanied by Fibonacci projection at 78.6% and a Fibonacci extension at 161%. So how do we find these levels? The projection was found starting from point 1, 16th of September, going up to point 2, 15th of November, and ending at point 3, which is on 3rd of December, right? We can see the 78.6% projection sitting pretty close to the 161% extension. The extension level, right, was found by starting a retracement from, hang on, let me see, where is, right. The extension was found starting from, by using a retracement, starting from this swing high on 15th of November, ending with the swing low here on the 3rd of December. And we can see the 161% extension sitting at 161.75, which is almost in line with the swing high resistance. So that's how the first resistance has been identified. And the first support is identified at 151.57. Let me see if there's any other level in between. Perhaps, right, there's also another overlap that we can use as well. This is also another pretty decent overlap here at around 153.27, right? We can see dollar yen running into resistance here at the end of October, and then bouncing off this level here on 19th of November, and then making another bounce here on 17th of December, right? Not the cleanest level, right? This is definitely not the cleanest level, but I can still identify a pretty decent overlap at 153.27, which I will identify as the first support. Right, so these are the key levels for the dollar yen. And we can run it for now. We can still run a retracement from this swing low on 3rd of December, going up to the high. Let's see which is the ultimate high here on 26th of December. And we can see that the pivot level, which is the overlap support, is also accompanied by Fibonacci retracement at 23.6%, and the first support is also accompanied by the 50% Fibonacci retracement. So for now, this retracement is still valid because dollar yen continues to trade underneath, continues to remain underneath 158.08. But should we see dollar yen break above this high here, then this retracement is no longer valid, and we're going to remove it from the analysis. So just take note of that. All right, then let's see. Let's look at cable. Let's look at the British pound US dollar, right? This currency pair is also known as the cable. And similarly to the euro, we can see a very similar market structure, right? Of course, with the dollar index rebounding sharply since the end of September, the pound has, of course, reversed strongly as well. This currency pair has lost over 8% from peak to trough, right? Dropping as low as 1.2352, right? And it seems to have stabilized close to the first support at 1.2328. This first support is identified by a swing low that had taken place on 22nd of November. We can see that last Thursday, cable dropped pretty close to this level here to stabilize just above it, and has staged a strong retracement for 2 consecutive trading days, right? Even today, we see a strong retracement to the upside for this currency pair. Now, we can see that there's a nice overlap resistance at 1.2615. Right, we can see that this overlap resistance is also accompanied by Fibonacci retracement at 23.6%. This retracement level was found starting from here, right? Of course, this swing higher on 26th of September, going down to the low of Thursday, 2nd of Jan. Right, and higher up, the first resistance is identified at 1.2770. It's a swing high resistance that was formed on 9th of December, and is also accompanied by Fibonacci retracement at 38.2%. Right, so these are the key levels here for cable, right? And just to wrap things up, right, let's begin with the dollar index, right? The dollar index has made a very strong rebound since the end of September. However, the last couple of trading days, including today, we've seen this index pull back, and it could stabilize at around the pivot level at 107.49. But take note, we've also got ISM PMI data, ISM services PMI data out tomorrow, and the composite PMI data for the US out today as well. And should we see a strong set of macroeconomic data or PMI activity, right, that could rekindle the demand for the dollar, and we could actually see the dollar index stabilize, maybe even above the pivot here, right? Actually, I see a pretty decent intermediate support level at around 108.48, right? This was previously a little bit of resistance here being formed on 19th of December. And then once the bullish breakout took place on 2nd of Jan, this level could also function as a pretty decent pullback support level, which seems to be the case today, right? We do see the dollar index bouncing off this intermediate support at 108.48. And should we see PMI activity point to stronger output, right, we could actually see demand for the dollar rekindle much earlier, and perhaps the dollar index could even stabilize at around the intermediate support before resuming the uptrend. However, right, the pivot level at 107.49 is still the first a major support area, right? We see a nice swing high resistance being formed on 22nd of November, and this pullback support level is also accompanied by Fibonacci retracement at 23.6%. Right, I think there's probably one more retracement that we can run from here. This swing low on 6th of December going up to the high on the 2nd of Jan. Right, we can also see the 23.6% retracement aligning pretty well with the intermediate support, and we see the 50% retracement along with the 23.6% retracement align well with the pivot. Right, and looking at gold, right, gold looks to be sliding lower and is actually trading in a sideways channel since 14th of November, right, ranging between $2,560 on the lower bound and at around $2,720 on the upper bound here. Crude oil, has made a very strong rebound since 6th of December and has actually broken above a major overlap resistance last Thursday, 2nd of Jan, where the pivot level was previously a very significant overlap resistance. And once the bullish breakout occurred last Thursday, this level could now potentially function as an overlap support, which is accompanied by a Fibonacci retracement at 23.6%. The next major resistance for crude oil appears to be around this swing high resistance that has taken place on 10th of October. That's at around $76 per barrel. So crude prices are currently pulling back today, and should it reach the pivot, this is where I think it could stabilize once more and reverse to resume the uptrend. Right, and for US 500, right, it looks to be retracing higher, right, especially since last Friday, and I see a major resistance close to the intraday all-time high that was formed on 6th of December, which is where the pivot has been identified, and is also accompanied by a Fibonacci projection at 100%. Beyond this intraday all-time high for US 500, the next major resistance barrier is identified by Fibonacci extension at 161%, and that sits at 6,287. All right, so that's all I've got for you guys today. Right, thanks everyone for tuning in to today's webinar brought to you by IC Markets. Do look out for all upcoming webinars for this week. Right, we've got webinars coming up in Thai, Bahasa, and English for educational topics as well as live analysis. And we'll wrap up with the calendar. Right, take note, it's a pretty busy calendar as well. It's US Jobs Week, with ADP employment report being released on Wednesday, 8th of Jan, followed by the highly anticipated non-farm payrolls and unemployment rate that's released by the Bureau of Labor Statistics, and that's on Friday, 10th of January. And sandwiched in between, we've got inflation data out of Switzerland, inflation data out of the Euro area, Australia. We also have the minutes from the FOMC meeting that took place in December as well, and a whole bunch of other macroeconomic data releases. Right, so that's all I've got for you guys today. Right, thanks everyone for tuning in to today's session, and do look out for all upcoming webinars brought to you by IC Markets. Right, wish you all the best in your trading journey, and looking forward to seeing all of you at the next session. Right, thanks everyone. Take care. Have a great trading week.